U.S. slowdown getting worse, and GE's pension problems coming to the fore. Will the stock market save us? We'll find out. Coming up. I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service gold and silver dealer specializing in strategies to help you survive and thrive the reset that has already begun. And today we're going to talk about our quick little headline news. And wow, shocker, American railroads are in recession with no end in sight. Good thing there's not really going to be a recession, because seriously, it's getting worse. But the consumer is strong. Really? Not so sure that that's the case. But look at this recession headline where U.S. rail cars have declined from a year earlier. And we're talking about shipments down for autos, coal, grain, chemicals, consumer goods. That's a big one. And crude oil, the only bright spot. In addition to that, other indicators, the ISM, the manufacturing and the service sector, have now both turned down in a pervasive way. And where you have the manufacturing sector in negative territory below 50, mark below 50 shows contraction. Now we have the service sector heading in that direction too. And what does that do? It undermines confidence. And with the consumer being the engine of the economy, well, I think that's pretty significant. You've got 36% that think that their wages will rise, and only 23% that thinks that the economy will improve. Well, I'm not really sure what's going to happen to make that improve, but it really needs to, because globally we have a big issue with pensions. And you have the most powerful pension over in Denmark that are watching their liabilities swell. And what they're talking about is legacy policies with higher guarantees when interest rates were a lot higher than they are in Denmark. Of course, they're negative now, but they have to use equities to meet their obligations. And yet even Wall Street is talking about the fact that whatever the future holds, stocks they're not priced for recession. In other words, they're severely overvalued. Now, I thought this was super interesting because in the Wall Street Journal, stocks rebounds on hopes of easing. Well, what is the easing? Lowering interest rates and printing money. Why is that a good thing? Let's just focus on the interest rates for 2 seconds, because they're thinking that this is a demand problem. It's not a demand problem. We've had interest rates so low for so long that anybody that wanted to borrow already has. So if they're taking on more debt, they're already piling into debt that they cannot afford, and particularly when interest rates go the other way. In the meantime, you have fewer stocks that are participating in any level of rally. That's not a good sign. It's showing you that the breadth of the market, those number of stocks that are actually moving the markets up, are declining. And it's really just concentrated in one place. And then this I had to talk to you about, because I was there in 1987 on Black Monday. And this is like eerie to me, because the headline reads, "Safety stocks fail to provide investors shelter from storm." Exactly right. I mean, I remember I was in love with Hawaii Electric because, hey, it's an electric company on an island. You know, they don't really have a whole lot of competition. When I was there on Black Monday, I don't care what stock it was, they all tanked. Stock market is not going to save you, and it's not going to save the pension companies. And as you may or may not know, GE has announced changes and freezes in their current pension plan. Now, there's a defined benefit. So this is where the corporation actually has all the liabilities. So they had to make some changes, and I'm going to show you what those are in just a second. But they may have the most underfunded pension plan, GE. But look at ExxonMobil, General Motors, Delta Airline, Ford, UPS, Pfizer. And I found this really interesting, which is why I left it in there. Former Chief Executive Officer Jeff Immelt, who lavished precious cash on the ill-conceived acquisitions and buybacks that have contributed to GE's current troubles, is already collecting his pension benefits. So these changes won't affect him. Whew, that's a good thing. So I'm being facetious. I hope you know that. So let's see what those changes are, because what they plan to do is freeze the plans for about 20,000 U.S. workers. Now, that doesn't mean that the benefits that you gathered up to a certain period of time are lost, but from a certain period forward, they will not be funding it anymore. It's just going to freeze, and that's going to impact about 20,000 people. Then approximately 700 executives that are currently eligible for supplementary pension benefits, those benefits too will be frozen. Now all of this is going to start in 2021. What else is happening in 2021? Oh yeah, the LIBOR. We're going to be talking about what's going on with that and the SOFR in this country maybe next week or the week after, but there's a lot that's going on. But we know that they have not taken any new employees into the pension plan since 2012. So this is mostly going to have the greatest impact on hourly wage earners or lower wage earners, 20,000 of them. But it's going to have a bigger impact there. So we have to watch also for the PBGC, and if GE ends up turning their pension program over to the PBGC, which is the government's agency for corporations when they can no longer pay their pension plans. But I want to go back for just 1 second. I'm sorry. Oh, no, it'll be forward. Forgive me on this one. Because the other thing that they're talking about doing is giving people that are already retired but have not yet started to take the distribution a lump sum distribution. All of these changes are presumably going to save GE about $8 billion. And they need to do something because they're in deep doo-doo. So if the stock market would keep going up, or hey, the bond market would keep going up, but that's not going to happen. They're not going to be bailed out. In the meantime, on the trade war front, well, now we've been cleared, the U.S. has been cleared to impose tariffs on our European allies, which we have done. We can go up to 25%. I believe those kick in on October 18th, so coming right up. And you can see that these are the imports, what the U.S. imports from the EU and what we export to the EU. So far more imports than exports. So this, from one trade war to another trade war, yeah, and into a slowing global economy and a slowing U.S. economy. So what do you think that might look like? Well, let's look at Argentina, because their stock and bond and currency markets are decimated, particularly since the capital controls that were put in on September 2nd. So this is their bond market, which means that nobody wants to lend them any money. Shocker. Here's their stock market. Well, I don't know. Here's September 2nd. So somebody before that knew a whole lot. Would you know that you need to get out somewhere near a top up here? Or would you be sitting on it while it tanks? This is not a good sign, but it is telling you the most likely outcome for all of the different stock markets, including the U.S. and this is their currency markets. Okay, capital controls, when money's trying to flee, when you're trying to protect yourself, that's when they put the capital controls in. Although I will say, since 2008, there have been in this country, they don't call them capital controls, but they have been making our choices more and more and more narrow. And the problem is that confidence piece. Will anybody have confidence in those markets, in the stock market, in the bond market, in their currency markets moving forward? No, it's going to have to reset. That's why you got to have physical gold and silver outside of the system. And that's it for quick headline news. I hope you found value in it. Make sure if you have any questions, send them to questions@itmtrading.com. You'll be able to get all the links and everything on our blog at itmtrading.com/blog. So till next time, bye-bye.